Good day, I am Armand van der Spy and I will be providing a quick update on the PSG Wealth Offshore solutions for the month of September 2021. Looking back at markets over the quarter, we can see it started well for shares, but then the gains were erased amid rising inflation and worries over China. Developed market shares were flat over the quarter in US dollar terms, with declines in September erasing prior gains for the quarter. Emerging market equities also underperformed amid a sell-off in China, while commodities gained with natural gas prices seeing a sharp spike. Developed market equities were broadly flat over the quarter after a moderate decline in September erased the quarter's prior gains. However, it still leaves developed market equities sitting strong on the year-to-date numbers. Chinese equities have struggled though and dragged emerging market equities down over the quarter, despite some markets, such as India, continuing to perform well. Equities held up over the quarter despite some concerns about a peak in the rate of economic growth, supply disruptions, and rising inflation. Ultimately, investors still believe that, despite a moderation in the pace of growth, recession risk remains low. Expectations for ongoing earnings growth in the coming years are therefore helping to support equity markets. Moving on to the fixed income side, we can see global sovereign bond yields were little changed in the quarter. The US Fed also said it would soon slow the pace of asset repurchases. Clearly, winter brings with it some uncertainty in relation to COVID's potential impact on health systems. But even if hospitalization rates do start to pick up again, we expect the economic recovery to be delayed rather than derailed, thanks to still very healthy savings balances that consumers have accumulated. These elevated savings levels, along with solid wage growth, should also help most consumers to weather the increase in prices currently underway. So while there may be some bumps along the way, we continue to believe that the pattern we've seen so far this year of equities outperforming government bonds is likely to continue between now and the end of next year. Moving on to the global portfolios on a holistic view. Looking at the month-on-month growth in AUM for the offshore solutions, we saw a slight drop during the month of September. Advisor flows do remain strong over the month, with $29.8 million in net inflows. However, market movement was the dominant force. September was a tough month for global markets, and this did impact the overall AUM. Looking at the peer group rankings, we can see it remains strong across the board, with longer-term numbers producing favorable results. 3 out of the 6 funds produced first quartile performances over the recommended holding periods. And now looking at short-term highlights, we can see over the 3-month period, top performers included BlackRock, Dead Group, Royal London, and Goldman Sachs, while bottom performers were 91, Baillie Gifford, and Threadneedle. It's also pleasing to see over the 3-year period that the majority of managers did outperform the respective benchmarks. Looking at the risk radar, we can see 3 funds appeared on the list this month. This included 91 Global Multi-Asset Income and 91 Global Strategic Managed. Moving on to individual performances. The Global Preserver had a tough 3-month period, underperforming its peers by 56 basis points in the dollar class, but it did outperform by 73 basis points in the pound class. The shorter 3-year numbers remain under pressure relative to peers, but they have seen improvement. However, the longer-term results are still favorable. Year to date, the manager's exposure to high-yielding fixed income and equities has added positively to absolute returns. The Global Moderate saw a positive 3 months and generated 14 basis points of excess return. The fund has been performing better over the short term and comfortably sits in the second quartile over the majority of periods. The Global Flexible Fund saw another 3 months of strong performance for both the dollar and pound class, with each outperforming the sector for the month. As equities struggled in September, causing the quarter to end in negative territory, the fund still managed to outperform, even in this down market. Global Creator also saw a strong performance over the 3-month period, outperforming the peer group by 75 basis points. The fund has provided superior downside performance over this challenging market environment. Overall, we can see that PSG multi-management is staying true to their three-pillar approach. These three pillars include consistent above average performance, below average risk at a competitive price. For the global moderate which has lagged, action has been taken and we continue to monitor all changes. For the remaining three funds, each has delivered on all three pillars. That is the end of this month's update. Thank you very much.